Hey everybody, welcome to this week's podcast. It's the 2nd of April 2026, ahead of the long Easter weekend, holiday weekend. And Mo, this is a special podcast.
Yes, number 52, 1 year anniversary.
Yep. And what are we talking about today?
Talking about the USDA surprises in wheat, cotton, and sunflower. Okay, let's get into how the week ended. And you can see I highlighted corn. May 26, corn futures took a dive to end the week. We're breaking a key pivot at 455. It's not the end of the world, but it's not technically acting very well. Soy oil was the winner again because crude oil popped or soared 11% to close at 111.62, up $17 for the week, a new closing high for 26. It tried to help canola, so higher soy oil spilled over into higher canola, but canola was still able to close lower, having a difficult time breaking that ceiling at 750. I think it's short-term overbought. Cotton did rise, although those cotton acres did come in higher than expected. I think the problem there simply is when you own a cotton machine, you're stuck planting cotton. There's not much else you can do. Live cattle, feeder cattle also soared again this week. Looks like they're within striking distance of their record highs, within $7 to $8 a carcass. Milk also closing at new contract highs. The Dow actually recovered. We thought that with the Trump speech last night with crude soaring that the Dow would be off 1,000 points, but I think we're getting past that. Looks like we're getting divorced from those headline news and this war in Iran. I think we're coming to the realization there's two things going on. There's an Iran war with U.S. and Israel, but there's also this Strait of Hormuz. And as long as we can reopen that Strait of Hormuz, maybe we can get past these headlines where we're becoming numb to them and it becomes old news. Okay, let's get into the USDA acreage report.
Let's start with the USDA March planning intentions and the grain stocks report. Key reports during the year, and this time around, the response as far as the farmer survey is concerned came in at a record low, 37.6 versus last year at 44.3 more.
Yeah, so this is a problem. How accurate is this data? The USDA is at half staffing. And the other problem I have is that if you look at this chart, a good portion of those surveys were taken on March 1st. And the war started on February 28th. So I'm not sure the war or the higher fertilizer prices had an impact on this report. So it's a good start. We got some guidance, but I think a lot could change between now and June.
Some surprises in the numbers that were released by USDA. As you guys can see there on the chart, corn for 2026-27, U.S. crop came in at 95.338 versus expected at 94.37. Soybeans came in at 84.7 versus expected at 85.55. And more, I guess you'll speak about wheat later, but as far as all wheat is concerned, 43.775 and 44.79. But we had some surprises as well among other crops.
Yeah, so cotton held up. They were actually higher than expected. I think when you have a cotton machine, you're stuck planting cotton. It's not, you can't use that same machine to go plant corn. And the farmers are struggling with break-evens. Canola was higher. Again, in the Northern Plains, they can grow alternative crops like canola. Sunflower up 49%. I'll tell you why I think this is important, because again, these are the swing acres in the Dakotas. We keep hearing that there's many farmers in some counties, according to dealers, that have not booked their fertilizer. As much as 80% of the farmers did nothing. So they're taking a wait-and-see attitude. They're waiting to see if fertilizer prices come down. I have bad news. It's not coming down. Not anytime soon. Not during planting. In fact, this is happening at the worst time of the year because there's huge demand. And what are prices doing? They're moving higher to ration that demand. And I don't think we've rationed demand enough, because I think a lot of guys are swallowing that hard pill, that higher price, but some are saying that If it doesn't come down, we'll just switch acres to last minute to either, in this case, sunflower, canola, or I'm hearing a lot of soybeans, but I don't know if the dealers have enough seed to meet the demand in soybeans. And wheat, winter wheat, acres were down. Spring wheat, also down, a 56-year low. The combined total was like 738,000 acres down. It surprised the market. You add that on top of that dry weather in the U.S. plains, and this is a bullish report for wheat. Quarterly stocks.
We also received the quarterly stocks report. Not a lot to talk about there other than the fact that corn and wheat came in lower than expected. Soybeans was higher.
Right. So this 80,000 that came in lower on corn, that gets subtracted from the 25-26 ending stocks. So you start with a lower ending stocks, and then, of course, USDA makes some adjustments to demand, and we figure out whether it's higher or lower. I got to think, again, the corn export pace is very strong, still remaining at 30% above last year. USDA is too low by 415 million. That means that in the April crop report, we could see ending stocks on 25-26 drop below 2 billion if they don't make any other adjustments. So for soybeans, it's a little bit of a bearish short-term hit, but crush is strong, so the two could offset each other. And then for wheat, really a neutral report.
Well, for today, and which started yesterday evening, there was Trump's speech regarding the war. And Trump's speech seems to have escalated the war in Iran. It did not provide anything in terms of clarity. WTI crude oil prices soared by about 13% since then, and urea prices trade higher as well, up by about 9.4%. As far as the speech is concerned, and just to quote from some of the words used, Trump delivered an address on Wednesday night, providing updates on the Middle East conflict. Though he said the U.S. is getting close to ending the Iran war, he added that the nation would hit Tehran extremely hard. And again, his words, over the next 2 to 3 weeks, we are going to bring them back to the Stone Ages where they belong, is what Trump said. And crude oil prices today up by over $11 a barrel to new contract highs over $111.
He's one of a kind. That's for sure. I don't know if he's mastered the English language yet. But look, we've provided this chart before, and I apologize. I'm trying to give you a perspective. And, whether history repeats itself is tough. But look at this spike compared to the start of the Ukraine-Russian war. This is amazing. It's 90 degrees. It doesn't last, but we have to fix that Strait of Hormuz. So there's 30 countries. Trump basically, I don't think they miscalculated. I don't think they thought that Iran would use the strait as leverage. But Trump doesn't care. I think his team has told him, do not go in there militarily and try to keep that strait open because it's just going to cost us too much money. So he's literally saying, look, we don't depend on the strait. You guys do, Europe, Asia. So you guys fix it. And Europe and Asia is saying, well, but that's not our problem. We didn't start this war. So now there's 30 countries coming together trying to form a coalition to keep it open. So I'm assuming they're going to try to negotiate something with Iran. Iran is saying that, hey, maybe we'll start to charge a toll. Hey, why not? If you can make some money and they're going to pay. So we'll see. I can't rule out that we test the 130 high from 22, but crude lasted above 100 for 3 months. We're into 6 weeks now as we get into next week. So this could stay higher for longer. And that's why I thought we have to write off Q2. And maybe after that we can get past this. But
bad timing for planting season as well.
Yeah, unfortunately, because it just increases their input costs, right? You're going to have $4 a gallon gas is probably not the end of the world, but you start to get to $4.50, which I think you're going to see next week, $5. That starts to slow things down, so it is a concern. And then urea, again, perspective. This is U.S. urea FOB Gulf, 2022 highs at 880. So there's some talk in the trade that says, oh, well, this could impact 27 worse than 26. No, I don't think so. Why? If we can reopen that Strait of Hormuz, in 22, urea showed you that a year later, we were down to 300, down 65.9%. So think about it. Maybe we fix things in the next quarter, give it a year, wait till the spring of 27, and maybe urea falls again another 60%. So I'd be very, very patient. If you didn't buy your 26 needs, I'm not too worried about booking 27. And again, join our club, our app. This week we're telling our guys what to do post the acreage and quarterly grain stocks report. We were giving them our sense of what's going to happen here in the next 2-3 months. So try the program.
Let's talk about weather in the U.S. just ahead, or some places are already planting. March was one of the warmest on record for the U.S., and 3 problem areas that have crept up are the southeast U.S. plains and far western U.S. and the northern plains. U.S. plains may get moisture in the first week of May, but long-term concerns remain, and that news of a super El Nino seems to be overdone. And this year does not seem to be much like 2012. Long-term for the Delta, south and southeast remains a problem, including Florida to Carolina. And northern plains and the Midwest will be a hit and miss. Will they get timely rains? It seems like limited rain for the U.S. plains as we go into late May, June.
This is out to May 5th. And you can see this is that U.S. plains, maybe northern plains, expected to get some rain. Near term, the northern plains expected to get some snow and maybe 6 inches of snow. Maybe half an inch to an inch. This area here is your problem spot. It's very dry. Wheat futures are bouncing up and down like a yo-yo, depending on the forecast and whether that rain is being taken away or added again. But I'm not sure whether this is going to verify. So if it does not rain in the month of April, and we get rain for the first week of May in the U.S. hard red window wheat country, that's coming in a little late. So we're still very concerned about that area. And Abhinesh talked about this whole super strong El Nino. There's a lot of meteorologists talking about that. This is why they're saying you can't use 2012 as an analog year, because this is your backward C. And that is what caused the drought in 2012. You can see in 2026, even though the drought today looks worse in the south, southeast, Texas, western Corn Belt, western plains, the only area that is maybe okay is the Midwest. But because you don't have that cool water like you had in 12, they're suggesting that you're going to get a strong El Nino. But even if El Nino comes in June, it's going to take a while to get the effects of it, the cool, wet weather. So I don't know. I'm not in that camp that thinks that a strong El Nino is developing. I think maybe it could be a mild one. And the current La Nina into an Enzo could possibly create some issues. It's still early. It's only April 2nd. I need to know what weather does here in the next 60 days.
Yeah, the drought monitor did show expansion of that drought, especially in the Midwest. And some of those problem spots as well, including Oklahoma and Nebraska.
Yep.
Let's get into the CFTC situation. Now, since we're doing this podcast today, Thursday, we do not have the latest CFTC update, which is scheduled to be released tomorrow, Friday, which is when it normally happens. Funds are record long in soy oil. So this here is a soy oil chart. Currently, we are at 122,621 contracts, which is that red circle there. And that compares to the prior record, or rather the record high of 126,453 as of the 1st of November 2016. And this chart is the combined soybeans plus soy meal, soy oil, and canola combined chart, and the net managed money position is already record long. We are at 528,938 versus the prior high, which is a little over 450,000 contracts from November 2020. And this chart is the yearly comparison of the managed money position across all grains and oilseeds, including canola. And we are creeping close to that record long. Currently, we are at 846, 620 contracts combined, and that compares to the record long of 886, 405 from mid-April 2022.
The funds have more capital than they did in 21, 22. We could see more money flow. I think we've slowed things down. You can see here at the end, after this big spike higher. But seasonally, we can move higher. This is your corn December seasonal chart. You still got to feed the bull. You got to give them some reasons to do that. I think the mid-May Trump Z meeting could do that. I think weather short-term could do it. And then this is your seasonal for soybeans, sort of a similar pattern. You tend to peak somewhere in that, some years it's mid-May, some years mid-June. If it's a drought, it can actually last right into July and August.
And looking at the month of March, again, primarily owing to the Iran war, no surprises there. All the energies were higher. Heating oil, the big gainer in March, and also for the whole of Q1 2026, including crude oil, all contracts of crude oil as well. Among the commodities that lost out, you've got cocoa, Bitcoin not faring very well, and natural gas as well among the losers for the whole of the quarter.
Thanks for watching. Happy Easter, everybody.
Happy Easter, guys.
We'll see you next week. Take
Bye,
care.
guys.